Namaste, welcome to this Friday's episode of Arthaniti, where we will discuss some important news which will impact our decisions when it comes to monetary matters. The first news that I want to bring forth is the Federal Reserve rate cut, which was announced yesterday on the 7th of November. Now, the Federal Reserve announced a 25 basis points of rate cut yesterday. This is the second consecutive rate cut that has happened since July 2024. Before this, a 50 basis points rate cut was announced. So, till date, a total of 75 basis points of rate cut has been announced, bringing the interest rates to 4.5%. The inflation in the US has been nearing the Federal Reserve target of 2%, and that is why these rate cut measures are put in place. It is expected that there is going to be another rate cut in the month of December, and after that in Jan there will be a halt. Now the newly elected incoming US President Donald Trump will be sworn in on 20th of Jan next year. What his government policies will further impact rate cuts after that. So before he is sworn in, it is expected that the Federal Reserve might announce another round of rate cuts. Now, when rate cuts are announced in the US, the bond market in the US looks less enticing. What it does is capital starts flowing away from the US economy. This is good news for emerging markets like India, who has seen its stock market go in a cyclical up and down for a month or two now. Now, this kind of news is a welcome news for stock markets in India, as the bond market in the US will be less attractive. Funds will flow away from the US market and into emerging economies like India. The second news item is that of State Bank of India, the largest lender in the country. Now, State Bank of India has recorded good numbers when its quarterly results were announced yesterday. The gross NPA has also come down, as well as net NPAs, non-performing assets of the bank, have declined, as you can see in this news item, to 20,294 crores as compared to 21,352 crores in the same period last year. If you see the profit that SBI has made, it has net profit of SBI has increased to by 28% to 18,331 crores on a year-to-year basis. That is a phenomenal result that SBI, the country's largest lender, has declared. The net interest income for the second quarter of the financial year 2025 increased by 5% to 41,620 crores. So overall, the results that has been declared by SBI are phenomenal. The next news item that I want to bring to your attention is that of the new rules that kicked in on the 1st of October regarding the National Savings Scheme, National Small Savings Scheme. Now, there were two schemes that were launched. One was NSS 87, which was operational till 1992, after which it was stopped. Another scheme was launched, NSS 92, which was in place till 2002, after which no new NSS schemes were launched. Right, so after 2002, the NSS schemes were no new schemes were launched. Now, as of 1st October 2024, what the government decision has been taken is that if you have invested in these schemes and not taken out money, it was paying interest at the rate of 7.5% till September 2024. Come October 2024, no interests will be payable on these schemes, and the amounts have to be withdrawn, and the withdrawal amounts are subject to income tax at your taxable slab rates. So these are some major changes that the government has brought in when it comes to NSS scheme. Do not confuse NSS with NSC, National Savings Certificate Scheme, because National Savings Certificate Scheme is intact as per what has been running till date. So do not confuse NSS with National Savings Certificate Scheme. This is a different scheme by the name National Saving Scheme. So if you are an investor in this scheme, you will stop earning interest from 1st of October in this scheme, and you will have to withdraw money which will be taxable. One more important news that was that came to my attention was that now NRIs can use UPI for transferring money to India. Now there will be no fee for transfer from foreign currency, and there is a process that has been given, and I will run you through that process. The process includes linking your international mobile number with your NRI bank account which you hold in India. Then download any UPI app, complete the onboarding process, verify your mobile number, create a new UPI ID, select bank account number, and transact. The news item also gives a list of what is allowed for NRIs and what is not allowed for NRIs, like sending money to Indian merchants and UPI IDs in INR, only in Indian rupees is what will be allowed. You cannot transact in foreign currency, and UPI transactions are only allowed in Indian rupees. One more important thing that you need to do to use this facility is you will have to link your international number to your NRE or NRO accounts. Now, transfers are permissible from NRE to NRO, from NRE to resident accounts, to merchants, to different NRE accounts, and so on. Transfers will not be allowed from NRO to NRE accounts, correct? Because NRO are ordinary resident accounts and NRE funds can be repatriated outside the country. So, transfer from NRO to NRE will not be possible using UPI. Which countries support UPI transactions as of now? Countries like Australia, Canada, France, Hong Kong, Malaysia, Oman, Qatar, Saudi Arabia, Singapore, UAE, UK and the USA are some of the countries. The list of banks is also given, and the various UPI apps that you can use to send money to your NRI accounts without any fee in India are also provided. So, if you are an NRI, this is who is staying in one of these countries, then you are going to get benefited from this news that UPI for NRIs is now available for you. This Friday, these were some of the interesting news items which I thought I should bring to your attention. And if you have liked my video, this and earlier videos, I would request you to like, subscribe, and share to my YouTube channel. I share interesting tidbits and news items, education videos, which will help you in your investment journeys. Till next time, stay safe and goodbye. Have a good weekend.